Welcome back to Market on Close. Let's do some trading with Gareth Soloway joining us, Chief Market Strategist at InTheMoneyStocks.com. Hey, what do you think about that adage there? Time is not a bear's friend, Gareth.
In general, that's a true statement. Absolutely.
Yeah, true, right? Naturally kind of shorting part of the timing game. All right, how you feeling? Because I know that we talked about shorting some of the tech stuff, and we did get some pullbacks during that time frame since our discussions about shorting some of those names, in particular Apple that we talked about before. Still juice to be squeezed out of any of those tech shorts?
Yeah, I do believe so. So on the charts, what we're seeing is we're seeing lower highs starting to be put in. We still haven't seen lower lows. That's the one thing I'm looking for now. So if we look at Apple, for instance, 172-ish, that's your level. If you break that, then you start making lower lows with lower highs. That's a major trend change and should be noted by investors, and it should lead to further downside as well.
Okay. Yeah, it seemed like we had a little crack that kind of opened up the opportunity for Apple here around the event. We got Adobe tonight. I know you're looking at that too. Is that from a similar kind of valuation perspective? It's gotten too lofty or what?
Yeah, I do think it has. I think, you had a stock here that was trading at $270 in late last year in November of 2022. It's rallied all the way to $575, just pulling back a little bit off that. The key on this chart is that if you go back to 2021, 2022, there was this classic M top, just like Bitcoin. The price here of Adobe has rallied back to the low end of that middle point of the M. Historically speaking, if you look at 100 of those charts, price generally pulls back off that level. So as a technical trader, I'm looking for a pullback on Adobe. Doesn't necessarily guarantee it'll just be on earnings here, but overall in the next couple weeks, you would expect a pullback to continue.
Yeah, the last earnings was pretty volatile because we had that big candle. I mean, it went sideways, but ultimately came back. So when you do this, you target some pretty deep downside. Is it like a big move, or is it just a selling upside approach?
Yeah, I think for the most part, Adobe, I wouldn't expect a massive move down on earnings like an Oracle type drop. That was kind of an outlier, in my opinion, for Oracle. Very, very rare to see. But I think over the next multiple months, if I'm correct, that the economy does start to show weakness, that we do see kind of this negative vibe take over, stocks are going to suffer. And that will include Adobe as demand starts to falter from the consumer side. Okay.
Now, Adobe, to your point, the Oracle move was very dramatic and kind of in the same category, right? Very generally speaking, cloud. But it's held on decently so far. What's your thought on this whole ARM IPO's impact on the market? You think this is like a true refresher, proof that we can handle more tech supply?
I'm not sure if I would go that far. So one of the concerns I have is that if you look at where NVIDIA is trading today, NVIDIA is actually struggling. We have really a solid rally on the NASDAQ, the S&P as well, and NVIDIA is struggling, and that's part of the semiconductor sector. And if you look at the SMH today, the SMH is actually struggling as well, just slightly positive. So while this is a nice thing to see, the fact that it's up from its IPO price, I would be very cautious here. We're getting some signals from leaders like NVIDIA that show us the semiconductors could be ready to roll over. And the other thing to note too is if you look at the chart of the SMH on a larger time frame, like go to the weekly chart, look at the highs from 2021. We had this beautiful double top just in the last couple months on the semis, right? We went up to that same level. We've now started to pull back. I would just draw people's attention to that Bitcoin top, same exact pattern on Bitcoin, and we know what happened to Bitcoin. So again, it's not that patterns necessarily have to repeat, but patterns are formed by investors, and investors trade off emotion. And so that's why things tend to repeat over and over again. So I take note when you see the same pattern repeating and the result is the same over and over again, you generally want to say, okay, be a little cautious here with the semis. They've had an amazing run. Be a little bit more cautious.
Okay. Hey, let's talk coins for a sec. BTC moving back up to 27. Interesting chart here around all the ETF stuff last couple of weeks. Tried to move, tried to drop. None of them took. Nothing took in either direction.
Yeah. Yeah, absolutely. So what we saw here is we saw that Ripple news price popped for a day, reversed the that very next day. Then we saw Grayscale news price popped 2 days later, it reversed. Now what we did see, and this is a positive for the bulls, is that we've had higher lows all the way up from the lows on Bitcoin, basically a little over a year ago, right? Now the latest low was just above the previous low, so the higher lows have been maintained. That short term is bullish and probably why we're seeing a couple up days in Bitcoin. If you're a technician, if you're someone who's trading Bitcoin, you do not want to see Bitcoin get below 24,750 because you then have a lower low. And once you get those lower lows, the whole perception, technical traders are going to start to hop on the short side and price can cascade very quickly. As long as it holds here, you could actually retest 31, 32,000. But again, watch that 24,750 level.
Nice. All right. Like always, the level specifics. Appreciate that. Let's talk Lennar before we let you go, Gareth. All this tech, let's mix it up. Talk some housing, because ironically, the best trade out of all of them has been Lennar. You got single-digit multiple up 55% or whatever the past year. I mean, it's even doing better than Adobe, and it's cheaper.
I know. And to me, this shows the kind of the effects of the market, how things can get lopsided. And I would just draw your attention to this. We know that mortgage applications, 30-year basic lows at this point. The housing market has basically stalled out. We know interest rates based on today's PPI and yesterday's CPI, rates are going to remain higher for longer. That's what we keep on hearing from the Fed. We didn't want to believe it early this year. We didn't want to believe it late this year, but it's finally something we have to come to terms with. And what that does is it makes it very hard for consumers that are already strapped to buy homes. The first thing I see when I bring up that Lennar chart is a head and shoulder pattern. It hasn't triggered yet, but it does make me wary that this thing is probably headed lower in the coming months.
All right. So even the rocks that have been the foundation for the economy might be able to crack too. Thanks, Gareth, as always, for the takes. Appreciate it.